All right, ladies and gentlemen, a very good morning to you and welcome back to the session. This is the 9:30 trading room, TD Markets Academy. Before we get started, remember that the information discussed in this session should not be construed as advice. Yep. All right, there we go, guys. We are live. We are ready to rock and roll. I can see Sam, Batical, Schooler, Jules, Knight, Jack of all trades, Robert. Good morning. Good morning. Good morning. Good morning. I hope everyone is doing well. It's cold out there. It's so cold out there, but I hope you guys are warm. Hope you guys are doing well. Let's get it started. It's a Wednesday. It's an important day in the markets today, right? Because of the inflation data out of the US. So we're going to talk a little bit about that inflation data out of the US. All right. But before we get started, remember, if you want to open up an account, if you want to sign up for an account, if you're joining us for the first time, you want to sign up for a trading account, our website is TD Markets, all right, tdmarkets.com. Just click on client, register as a client, and then this will take you through to the registration page. It will take you under 2 minutes to do it. Quick and simple process, all right. We also do have education, our TD Markets Academy. We also offer some trading education. You can access that at tdmarketsacademy.com. You need an account. You need a trading account, funds in your account for you to access the education. All right. So that's important. You can also click on Start Today. It will take you to opening an account, right? You can either use the tdmarkets.com website or the tdmarketsacademy.com website. If you click on Start Today, it will take you to this registration page, right, where you can sign up for a live account. All right. We also have our crypto division, TD Markets Exchange, TDME. If you want to trade crypto derivatives directly from our exchange, our website is tdmarkets.io. So you can trade CFDs. You can also trade crypto derivatives. All right. But obviously, CFDs on our MetaTrader. You can also trade crypto on our MetaTrader, but you also have the exchange where you can also trade derivatives, crypto derivatives from our exchange, right? So our website there is tdmarkets.io. All the links are on the chat. All the links are on the chat, all right? So let's get it started. Like I said, the CPI, we've got inflation data out of the US today. This is what's making headline today, all right? So, a very important report out of the US, and at 2 p.m. we're going to be doing a live stream on this, all right? Just like the NFP last week, today at 2 p.m. we will be doing the NFP, not the NFP, but the CPI session, all right? All right, so let's start with the CPI. Oh, by the way, right, don't forget to subscribe. We are currently on 6,000. We hit 6,000 subscribers. We are now gunning for 10K subscribers. All right, so let us subscribe. We're gunning for 10K subscribers. All right, there we go. So the CPI, guys, right, before we get onto the charts, let's maybe talk a little bit about the CPI. Obviously, consumer price index, one of the reports that assists, or not really assists, but that influences the Fed's decision, right, on interest rates. So that is how we should be looking at it. Whenever we look at CPI, it's not about the market asking whether inflation is high or low, right? It is all about whether the data will change expectations for the Fed's next move. I'm going to repeat that. When you look at the CPI, it's not all about looking at the data and asking whether inflation is high or not. No, it's all about simply asking whether the data we see right now will influence the Fed's expectation or change expectation for the Fed's next move or not, right? So the forecast, as you guys see, we've got the core CPI month on month, year on year. Core CPI month on month 0.2% expected. CPI month on month 0.1% expected. I'm gonna make it very simple. I'm not gonna get deep into the nitty-gritties. I'm gonna make it very simple. All right. So the basic relationship in all these reports, you've got core CPI month on month, year on year, CPI month on month, year on year. The basic relationship is this: higher than expected inflation, be hawkish, which means yields are likely going to rise, the dollar is likely going to rise, and gold is going to suffer. Now, lower than expected inflation, that means it's going to force the Fed to be dovish, which means yields are likely going to drop, the dollar is likely going to drop, and gold is likely going to go up. All right, so let me repeat that one more time. So this is the basic relationship. All right, higher than expected inflation, that means it's going to force the Fed's hand, and they're going to be a bit more hawkish, which means yields are likely going to rise, the dollar is likely going to rise, and that's going to put pressure on gold. It's going to weigh on gold. But lower than expected inflation is going to be the opposite. Feds is likely going to be dovish, treasury yields are likely going to drop, the dollar is likely going to drop, gold is likely going to go up. All right. But now remember, the actual data also matters, right? So understanding the basic relationship, the actual data also matters. So if inflation is much hotter, then we are likely going to get like strong movements, right? If it's much softer, we're going to get strong movements. So the bigger the data, the bigger the movements you're going to get. But if everything is in line, like core CPI comes out 0.2%, CPI month on month 0.1%, core CPI year on year 2.5%, if everything comes in line, then we might get limited reaction or muted reaction. You see, from that foundation, you will be able to then analyze the CPI data, right? And knowing how the market could react from that. All right. We're going to be talking about this more later on, right? Just to give you guys a heads up, we're going to be talking about this more later on. But as long as you understand the basic relationship, all right. Now, let's go to the charts. Let us go to the charts. All right. Yesterday, we've been keeping an eye on the yen, the commodities, and the indices. All right. We've been keeping a close eye on the yen, the commodities, and the indices. So we're going to just do a recap to see if the market has developed our movements, and then we'll take it from there. I'm on US 30 right now. Look at what US 30 did. Exactly what we spoke about yesterday. All right. Exactly what we spoke about yesterday. That once it breaks this, it's likely going to drop after that. There, right? If you missed yesterday's session, you can just go back to, on YouTube, and then you'll find it. So what this means here, guys, is that this pattern is now complete, right? The pattern is now complete. Price had to break that high one more time, give us a second high, and the pattern is done. The formation is done. That's why we had this aggressive move towards the downside. All right. So then what does this then give us? It gives us this possibility now. It gives us this possibility, right? It gives us this channel, which means now entries are going to be much simpler to identify, right? So the swing you are looking for is this one. Remember, the swing you want to get is this one. This is the swing, right? There could be short-term sells, but this is the swing you would not want to miss. All right. So while we're waiting for that swing, what what price could do here, right? So the pattern is done. We've got the impulse move that went back down to this previous low. So it went back down to this previous low. So whatever you see here, guys, is complete. The pattern is complete. The cycle is complete. You see where the market is right now. The cycle is complete. So usually when price gets down to this low here, you have to be careful because price can either reject and go up, or it can break and go down. These are the two possibilities whenever price is trading on a low which completes the cycle. All right. So for me personally, right, obviously I'm long-term bullish on Nasdaq US 30. You guys know, right? I'm long-term bullish. So if I'm looking for my buys, right, according to this, I want price to break this low first. Right? To create a new low. And once that new low has formed, then that's when I'm going to be looking for my buy setups. Right? So it seems like price is going to break this low, right? But for my entries, I would want price to break that low. To break this low first, give us a new low, and then at any point around this zone, start to look for my setups, for my buy setups. All right. It could go as low as rejecting or bouncing from this area. It could do that. All right. But it doesn't matter whether it's going to do that or not. The fact is we are ready for this one. All right. So intraday we could get one more push down. Intraday we could get one more push towards the downside before the structure completes, before we get that. All right, this is where now you're gonna have to decide whether you wait for the swing towards the upside or you take advantage of the short-term sell, which is a 50-50. It might happen, it might not happen. All right, so the short-term sell, there's 50-50 chance it could happen or not, because price already came back down to this low, right? Nothing stops price from going down one more time. All right. So this is how US 30 is looking. We spoke about this move yesterday. I hope you guys capitalized on this move. We spoke about this move. Once we break that high, we're gonna then start coming back down. We're gonna come back down. All right. So US 30, that's how it's looking. Nasdaq. Before I continue, remember there's the CPI later today, right? So the CPI definitely, it might mess up this setup. There could be spikes, they might mess up. So we just have to wait for the dust to settle. Nasdaq, as we all can see, that Nasdaq has not broken towards the upside. It's still creating this. It's still creating this pattern here, right? It came back down to the low. Let me do this. Let me remove this. There we go. So this is what Nasdaq is doing now, right? Everything is still bullish, by the way. So looking at the current price, price came back down to this low, gave us a correction. Now it's pushing up. The reason why price is pushing up is because of this formation here. So which means buy opportunities could have been somewhere down here. But this happened, I think this happened midnight or yesterday night. Yeah. So I think that happened there. So as it is right now, right? As it is right now, this is what could happen. Let me show you. This is what could happen. Let me just, or in fact, let me do this. All right. So looking at it this way, right? We have a tap on this demand zone. We've got a tap on this demand zone, and price completed completed the pattern. This is the pattern, all right? So from here on, the direction would be towards the upside. The direction would be towards the upside, right? A break, we would then look for this, right? If it happens that price comes back down here again one more time, we're still looking for this. If it happens that price goes down one more time, still looking for this, all right? So a breakout of this counter trend line. We also need the break of this, just to be sure. We also need the break of this structure, right? Just to be sure. We also need the break of this structure. So we could get the break of the counter trend line, price push up, and it also needs to break this for more, for momentum towards the upside. All right. So Nasdaq is coming nicely. It's coming nicely. So there was a trading opportunity down here, but this happened, I think midnight. So now what are we looking for now? We're looking for the break, right? I mean, you will look for your setups, basically. You will definitely look for your setups. But Nasdaq is bullish. US 30 might come back down one more time. It might first go down one more time and then start pushing up from there. Start to push up from there. All right. Cool. So in terms of Nasdaq, US 30, this is how we're looking. I'm not sure. No, I didn't cover German 30. It was the Nikkei. So with the Nikkei, look at what the Nikkei is doing, guys. Right? The Nikkei seems like it's gonna break above the structure, right? So the Nikkei, I'm just being a little bit patient with this one. I wanted to break above the structure. All right, but the Nikkei seems like it's gonna give us this, right? At some point we could get a correction. If we get a correction, that will be good for a continuation towards the upside. That will be good if we do get a correction, right? But Nikkei, all we're looking for is a break of the structure, create new structure, and then we'll take it from there. So nothing has happened on the Nikkei as yet. All right, and then gold and silver. So this is what's happening with gold and silver. All right, so this candle closed. The candle closed with a wick. Now, this is the second candle now, right? Obviously, if we're looking for shorts here, if we're looking for shorts, we don't want any candle to break that high. If it does that, then it's going to give us a different scenario. So what we want now is for this candle to form a lower high. That's what we want. So we already have the daily candle that closed like this. So now we're looking for the lower high. And then from there, we're then going to look for setups. So as it is right now, the market is pushing up. Remember where we are, right? This is where we are. We are on this high. If price is going to correct, there could be an opportunity to sell this correction if we're going to correct, right? If not, price will just continue pushing up. But any corrections here, there's going to be an opportunity. So now, this daily candle, we're looking for a lower high there for us to get that possibility towards the downside. All right. If you go to the lower time frames, this is how it's looking. On the lower time frames, on the 1 hour, this is how it's looking. We still have this demand zone or this supply zone here. We still have this supply zone. All right. So if the supply zone holds price, then we're likely going to see gold either coming back down to these lows or going a little bit further down that, right? Either coming back down to this area here, right? So yeah, so this is what's happening at the moment, all right? If the CPI pushes gold towards the upside and then it breaks this supply zone, then we're not going to get that move down. We're not going to get this, right? So it will depend what's going to happen. If it rejects, then we are looking for this back down to this low. But if the CPI pushes this towards the upside, then this structure will still continue. This structure will still continue. All right. Yeah, the structure will still continue. So where it is right now, it's a little bit dangerous to buy where it is, right? Any buys from here, it would be a good plan to wait for the break of this. It would be a good plan. But yeah, so watching out for this. One more push down. If not, if price breaks up, then we're then gonna go with the trend, right? We're then gonna go with the trend. So this is how gold is looking at the moment. This is how gold is looking at the moment. We'll come back to gold. Let's go to silver. Silver. Okay, so silver didn't really give us that strong rejection according to the daily candle. So it's still going up, right? So silver, where it is right now, it's about to complete this and go back to this high again, this structure again, right? Where it is right now, it's already pushed up. So it's most likely going to complete this. It's most likely going to complete this cycle by going back to that structure there, right? So the daily candle was not as strong. The rejection wasn't as strong. So I would assume that's why we're still pushing up. Gold. Yeah, gold just gonna wait a little bit on gold. Right. Yeah. So we'll have a look at this after the CPI. We'll come back and see how the market will be after the CPI. Right. If the CPI changes, then we're also going to change. So let's see what's going to happen. Silver as well. We'll take it from there. We'll take it from there. All right. So in terms of the commodities, this is how we're looking. Let me just look at the oil price. The oil price, nothing has changed, right? It's still going up to 92. So the oil price is still going up to 92. If it breaks 92, it's going back to 96, right? So at the moment, this is how it's looking. Very simple. The structure is bullish. We're going back to 92. If it breaks, we're going up to $96 per barrel. So that's how oil is looking, right? So gold and silver, I think a bit of patience is needed. And then the oil price has been bullish, right? Just a matter of finding setups. You find your setups, you are good to go. Yeah, you find your setups, you are good to go. Just a matter of finding those setups. All right. Cool stuff. Cool stuff. Now the yen is correcting at least. All right. The yen is correcting at least. So Euro yen still is still consolidating here. For the people that trade minute time frames, right? There is, according to this, there could be a short opportunity on the lower time frames here, right? There could be a short opportunity here for the people that trade the lower time frames. I'm simply looking for the continuation. So I'm waiting for the correction to form, and then looking for a continuation up. The one that is correcting, I saw one is correcting. What was it? Was it one of the yen pairs is correcting? Yeah, NZD-JPY. NZD-JPY is correcting, right? So NZD-JPY looking for a continuation up. So I'm looking for my buy setups on this one. looking for my buy setups. So it is correcting at the moment. And the other yen pairs are not correcting as yet. All right, so GBP JPY, still, I would say, developing that correction. I don't think it's ready as yet. Let me do this. Yeah, GBP JPY not ready as yet, still waiting for that correction. CAD JPY, the same thing. CAD JPY waiting for the correction before the continuation up. And then you've got Euro JPY, still the same thing, waiting for the correction. So the yen, it's a little bit slow at the moment, but waiting for those corrections. All right, those corrections. And then the euro pound, I'm still swinging the euro pound. Right? I'm still swinging NASDAQ. I'm still swinging US 30. So these ones, I'm swinging them. US 30 swinging it, NASDAQ, euro pound as well. Bitcoin, let's have a look at what Bitcoin is doing. So with Bitcoin, there is something, as far as the regulations is concerned, there's something that the markets are waiting for, right? The Clarity Act. So the markets are waiting for the Clarity Act, which is going to possibly provide big movements on the crypto, right? The crypto has been rather slow. So the markets is awaiting the Clarity Act. So what's happening right now, when you look at the current price, is, let me first look at Ethereum. Okay. So the current price is doing this, right? So we've completed this cycle, right? Price, we can see that it spiked, it pushed up, broke structure towards the upside. So we have this structure here, right? We have this zone basically here. Now, price is trading in between this structure and this low right here, right? So let me go to the 4 hour. Let's see what's happening there. All right. Okay, cool. So Bitcoin, we still anticipate Bitcoin to go back to this high, right, of 67,000. Now, there are two ways you can look at Bitcoin right now. The first way is Bitcoin is creating this structure. All right, which is a continuation structure. So at the moment, it's trading within this formation, which is a continuation. What does this mean? It means if it comes back down to this low, right? If it comes back down to this low, then it went down to where basically where the demand is, basically, right? Then you would anticipate something like this. Right? This is one way to look at Bitcoin. In terms of this. The other way to look at Bitcoin is this, where you have on the 8 hour, but this is visible on the 8 hour. The daily, it's not. The 4 hour is not. The 8 hour, where we have this demand area here. We've got this demand area on Bitcoin, right? So now it's testing the demand area, right? If this demand area is strong enough, then we are likely going to see a continuation up. So there are two possibilities here, right? With this pattern here, possibilities are that we could come back down to to this low before this pushes towards the upside. Before this pushes towards the upside, right? If this demand is not strong enough, right? But if it's strong enough, then you're likely going to get a rejection, a setup around here, and then a continuation towards the upside. Towards the upside, all right? Let me just look at the 1 hour, see if yeah, it's either we're gonna go back down to the low or we're gonna reject this demand and then go up. All right, how do you know the correction has ended or you scale down to smaller time frames? So the correction has, what happens with the correction is the following. All right, so a correction can create a pattern, right? So you've got something like this. Let me show you. You have a correction that can turn into a pattern like this, right? It's a correction but creating a pattern. And then you've got a correction like this, right? Both these are corrections, but one is a pattern, one is not. All right, so if it's a pattern, let's start with a pattern. How do you know if the correction is done? Well, you need to know whether it's a pattern or not. If it's a pattern, right, a pattern has its own unique way of developing before it completes. I'm not going to get too deep into this, right? It has its own unique way of developing before it completes, and two things are going to happen. So with the bearish continuation, this is the bearish continuation, right? The market will first create a high. Within the correction, you're going to get a high followed by a breakout. And I'm going to show you with this example here. So if it's a bearish one, the market will first form a high followed by a breakout. There is one way you can tell that the pattern is done, the correction is done. So where is the high? The high is here, right? Where is the breakout? The breakout happened there. So then what happens then is this. Depending on how well experienced you are, you can easily identify where the high is according to that specific pattern. Because sometimes the market can give you symmetrical patterns, sometimes expanding patterns. There are different types of patterns, right? But the fact remains, before price drops, they will first create a high followed by a breakout. That's one way to tell if the correction is done, right? It's not about scaling down to time frames. You can scale down, but it's not about that. It's about looking at the pattern itself. It doesn't matter whether it gives you symmetrical expanding or even a regular, right? So in this example, this is where the high is, there, and then followed by the breakout. The pattern is done, right? But now if it's a pattern, if it's a correction and it doesn't create a pattern like this, then a few things we need to look for, we need to look for a few things. We need to look for supply and demand, order blocks, Fibonacci, all of those tools, liquidity, all of those tools are going to assist us in understanding the highest probability, right? Like for instance, this one here, price broke structure, gave us a new low, and then it's correcting, right? As it corrects like this, we're going to then include tools like your Fibonacci, right? And then just closely monitor if there's rejections on those Fib levels, right? But now that needs confluence as well. So it's a situation where you would use the Fibonacci in confluence with demand and supply, if there is demand and supply, in confluence with a possible liquidity sweep, if it's there, right? It's all about confluence. So it's not really about one signal, right? It's a combination of signals that will give you the highest probability, and that's what we call confluence. right? That's basically one of the ways you can then understand what could tell you whether the correction is done, right? But you know what I do? This is what I do, right? Let me tell you what I do. Oh, wait, are we done with this analysis? Okay, yeah, Bitcoin, we're done, right? What I always tell our clients is that if price is correcting, right? If price is correct, let's say that the trend is going down and then price is correcting, right? I don't want you guys to really focus on where the correction is going to complete. Some things in trading, you need a bit of experience, guys. That is the reality. Some things in trading, you need experience. Before you drove 120 kilometers per hour, 140 kilometers per hour, you were driving 40, 80, right? You know, some things need experience. So if you're a beginner trader, I don't want you guys to focus on trying to figure out where the correction is going to end. Wait for the lower high to form. Wait for the lower high to form. All right. And once the lower high forms, learn your setups that will tell you that the lower high has formed. For instance, it could be something very simple like let me see if there's an example here. You see in hindsight, right? The lower high formed there in hindsight. But would you have known as a beginner that the lower high is going to form there? No, I don't think you would have known as a beginner, right? With experience, you would have had an idea. But as a beginner, you wouldn't have known. So what do I mean? What I mean is, don't try to figure this out yet. Try to figure out setups that are going to confirm that we have created a lower high, right? Work on developing setups that will confirm to you that, okay, that's where the lower high is. And that would mean that you are most likely going to come across your trades here, right? Maybe somewhere here or even down here, right? Don't try to enter the trade there. Exactly. It's not going to end well. You need experience for this. So learn your setups, master taking or finding trades here according to your setups. Once this has been confirmed, and with experience, things are going to open up. You're going to get used to these movements. You're going to start noticing things. All right. And then you'll be able then to, with probabilities, to, to predict that we could create a lower high somewhere here. That's it. You see how it is. But this one, I can tell you that this one is much simpler. You see this one, this is much simpler between the two, because both of them are lower highs, right? Both of them are corrections. This is much simpler to trade. Much simpler. You just need a breakout. A breakout is enough. If not, you just need to understand how the pattern moves for you to know where it's going to complete. But the breakout is enough. This one can be a little bit more challenging for beginner traders, right? But this one is very simple. So you take it one step at a time. This is what I tell the clients, right? And then from there, obviously in our academy, we then work on the setups, right? We show them setups. If the market gives you this question, how do you answer? How do you respond to this question? Which is different to how you respond to this question. Right? But the trade will be the same. You are looking to sell here. You're also looking to sell this. But the way you respond to these questions is different. So that is with the setups. All right. Yeah. So, yeah, I hope I didn't complicate it. All right. Let me see if I can find an example on the chart. Let me see this. I'm going to show you something. Let me check this side. Oh, I'm going to show you something just now. Yeah, so some things, they just need experience. So what you need to do, if you are a beginner trader, focus on mastering the basics, right? Before you go a little bit advanced, because the basics are going to assist you in understanding the advanced concepts, right? Basics like market structure. Understand market structure. Master market structure. Because from market structure, the application of Fibonacci's, the application of supply and demand zones and all of that, right? It's going to be much simpler because now you understand market structure. You are able to determine the direction. So that's very important. I'm looking for an example I can use. To show you. Okay, there we go. I think I found one. Okay, yeah, let me show you Euro-AUD. I don't know why we didn't look at Euro-AUD, but Euro-AUD would have been one of the setups we would have looked at, right? Let me show you Euro-AUD. So Euro-AUD, I'm on the daily time frame. You see the current move that's going down on Euro-AUD. We would have traded this move, and I'll explain why and how. All right, so just be with me, stick with me. So on the daily time frame, what Euro-AUD did is that it went back to this high, right? It went back to that high, and then it pulled down one more time. It went back again, and clearly it failed to break above this zone, right? And then it aggressively dropped. I'm on the daily time frame. I want you guys to follow me, all right? So I'm going to go to the 4 hour, but I'll come back to the daily. I just want to check something on the 4 hour quickly. I'll come back to the daily. So when you look at the 4 hour, do you see how explosive this move is? How explosive this move is. It's not about if you would have known beforehand if the market was going to do this. I don't want you guys to think, how would you have known that the market's going to do this? No, don't think about that, right? So now from there, we have this explosive move. This explosive move from this high, it created this low, right? And then it went up. So when price was going down here, because there were two possibilities, either price was going to break and go up, or it was going to reject. There were two possibilities. So price went down. So now it went back to this low. You see now, if we had this possibility here, you would have predicted that we're going to go back down to this low, right? Because of these two possibilities, any move towards the downside, you would have predicted you're going to go down to this low. Why? Because this would have given you this. It would have given you this. Before price fell down, it would have given you this. So which means your setup would be down to this low. That's your setup, all right? Good. Now from there, from this low now, from this low, right? There were two possibilities from this low. The possibilities were that we're either gonna do this or do this, right? But now, since the market is coming from this whole zone here, from this whole zone, from that resistance, probabilities were high that we're gonna drop since the market came from that strong resistance. So even though you had two possibilities here, probabilities were high that we're gonna drop, all right? Good stuff. So now we dropped, the market dropped and went down. And then as the market drops, what did it do? It broke structure, it changed the character, it broke structure, and then it completely gave us a new structure altogether. And the new structure here is lower lows. So here we have a lower low, right? We've got a lower low here. Now, I want you guys to imagine a situation where maybe you sold all the way down here, and then this information here, you don't have a sell, right? You don't have a sell. So this whole move, you don't have a trade. How would you have known what's going to happen here? Well, structure is very important. Market structure, very important. So now, price breaking this structure, right? You don't need two structures. You just need only one structure. But here we've got two structures. price breaking these two structures and giving us a new structure, what does that mean? It means the structure is turning bearish. It's turning bearish. This is a lower low. So your job would, or rather your analysis would be, now you are looking at selling the downward structure, right? So you would have waited for price to correct before you sold down. All right. So because of the break of the structure and the structure getting a lower low, we have a bearish cycle, which now, according to structure, we are most likely going to get a lower high at some point, and price will do what it's doing right now. So you see where it is right now. I can tell you that this move is not done. It's not done. So we have our lower high here. The move you see right now is not done, but I'll explain later on. Right. Now, how would you have known that this correction is done? That's the point. We're going back to that point. How would you have known? Well, it's not about exactly predicting that it's going to stop here. No, it's not about that. It's about understanding what pushes the market towards the downside from a technical standpoint, right? And that means setups. And I'm going to explain something very simple that most of you guys learned maybe on YouTube or wherever, right? Something very simple. You see, something as simple as this. Something as simple as this can tell you that we have a lower high here. Something as simple as this. Because understand the thought process. It's not about drawing these lines, guys. No, understand the thought process. The thought process is this. Follow me, right? Because of this lower low, and where the market is coming from, the market is coming from here. Because of this lower low, the whole structure has turned bearish. So therefore, if the structure is turned bearish, the market is going up here. The market is looking for a lower high. The lower high could have been here. It could have been there. It could have been there. It could have been anywhere, right? The market is looking for a lower high. So it's not about predicting that the lower high is going to be there. No, it's all about understanding what, from a technical standpoint, technical tools that will give you the highest probability that price is going to go down as opposed to going up. But this has to be in line with what? With the market finding the lower high. I hope this makes sense, because from the lower high, we're going to go down. So I want to show you guys that once you have this outlook, you don't need to learn super advanced technicals. You don't need to learn super advanced technicals. You can use something very simple that is going to confirm to you that this is the lower high. Something very simple. You see this channel. If you had this channel this way here, right? Your thoughts would have been, I want to see if price is going to reject at the top. And from that rejection, I want to see it breaking this, right? You want to see if the market would reject the top and after that breaking this. Does it mean you're going to sell there immediately? No. You could, but I wouldn't plan for that as yet, right? Now look what price did. You see this? It happened right here. It happened right here. So you had the bounce at the top of the channel and then you had the break. This shifts the momentum. The market was in this bullish structure, higher highs, higher lows, but now it's failing to maintain those higher highs and higher lows, breaking outside of the structure. Something as simple as this can confirm to you that that is a possible lower high. From that point on, you are just looking for your sell setups, because probabilities are higher that price is going to go down. Probabilities are higher that price is going to go down. So you see, and also something as simple as, I don't want to go too technical and too advanced in this, but let me see if I can use something different. Something as simple as this, right? Let me show you. A situation like this. A situation like this. Right? A situation like this, where you are waiting to see if this is the lower high, right? There. A situation like price breaking structure and retesting structure. You see this? This could be enough to confirm that, hey, that's our lower high. Now imagine you've got both of them. Imagine you have this. Imagine you've got this confirmation of a channel followed by this confirmation where the support was broken, now going to retest as a resistance. These two confirmations, this is what we call confluence. So now that means you are going to get a higher probability trade anywhere below this. You know, this move down here, you would have found a higher probability trade because now you have the confirmations now. It needs a bit of practice. You see that? So this what I tell, you know, our clients in the academy, that it's okay to miss this move, right? I know in hindsight you might think, yo, I missed this move. Wow, that was about 80 pips, 70 pips. I missed this move. It's not really about that. You are using this move, guys. You are using this move to confirm your setup. So sometimes there are certain moves in the market that you need to let go of to confirm a higher probability setup. And this would have been one of them. There's no problem in selling if you had a sell opportunity there. But if you sold here, somewhere here, that means you would have used all of this price action to build a setup, a solid setup, and to confirm that setup, which means selling down here would have been a higher probable move or higher probability trade. And then you are done. You are done. Just gonna take this, repeat the process, repeat the process, repeat the process, repeat the process. And then from there, all you need is consistency now. Consistency. So Euro-CAD right now, right? Euro-CAD already it has dropped 170 pips, right? According to structure, this move is not done. It's not done. This move is going to complete once we come back down to this low. It's going to complete once we come back down to this low, right? So I would be looking for short opportunities here. I would be simply looking for short because the trend I would be trading is this one. This would be the trend I would focus on. There we go. So now, every time price corrects like this, looking for a breakout. The next time it corrects, looking for a breakout. So now it's correcting now. Now it's correcting. Looking for the same thing that happened here, the breakout, looking for it also here for a break towards the downside. We're done. Looking for something like this. All right. So just a bit of gems there. A bit of gems, but I hope this makes sense, right? To answer the question from Kula, I hope this makes sense, right? Hope this makes sense. Cody Freak, morning, time frames, please. I don't understand. What about time frames? What about time frames? Do you want to learn about time frames? I'm not sure. Maybe if you can explain that there. Okay, so guys, let us just conclude. All right. In conclusion, the CPI might mess up gold and silver. We'll come back and reanalyze. But in terms of the yen pairs, in terms of the yen pairs, that has not changed. All right. So on NZD JPY, it's correcting. NZD JPY, I'm looking for a continuation. You see now how it's correcting. I'm looking for a continuation. All right. So this is what I was talking about with the yen pairs. So CAD JPY, we're looking for something like this on CAD JPY, dollar JPY, Euro JPY, and other JPY pairs, right? So I will be looking at this. I will be looking at this for a trading opportunity towards the upside, and then we'll monitor it throughout the week, right? You're gonna monitor, at least it's promising. We'll monitor it throughout the week, all right? And then the other yen pairs, they are developing. The dollar, will come back and talk about the dollar after the CPI because it might change, all right? So this is how things are looking, guys. Hope you've got your setups. This is how things are looking. Let's look forward to the CPI. So please take note that from here on, we're going to jump straight to the CPI session at 2. So the 12 p.m. session won't be taking place. We're going to jump straight to the 2 p.m. session. All right. So do join us there. The link is on YouTube, and I will see you guys at 2. All right. Great stuff. Everyone, have a good one. Enjoy the rest of your morning. I'll catch you in the afternoon. Cheers, guys.